Hello and welcome. This is Cashflow 2.0, the only podcast that walks you through the treacherous jungles of your financial statements and leads you on a path to not only overcoming some of the most costly mistakes that many new entrepreneurs make, but helps you make your money start working for you right now.
Sweet.
Join us today as Pam changes your financial future and makes finance fun.
Hey, welcome back to our newest episode of the Cashflow Podcast, Season 2. Really glad to have you here. And we are going to talk today a lot about something that is really important to entrepreneurs, which is context. And context as it relates to financials and the support you get from your financial team. And if we back up a little bit into what it is that we all are really doing day in and day out as entrepreneurs, it's making decisions. And the key is to get as many tools in our hands that are practical for us to help make those decisions more quickly and with the best information we can possibly get. And what made me think about this whole conversation, it's going to seem a little strange when I start, but I promise I will tie it all back together, is I was looking at my Mac computer the other day and just marveling really at computing in general and what it's done for us. See, I come from the days let's just say it's a while ago. When I actually started in accounting, we still used something that people may not even know what it is today. I will make sure that we include a picture in the show notes. But I used what was called yellow ledger paper for doing the work that I did and had a big old adding machine on my desk to basically create what would look a lot like an Excel worksheet, but completely manually. So it had rows and columns, and it was all configured so that you could put numbers in it and they'd line up. But you had to do all the math manually. In fact, that adding machine makes me think of something I should tell you about the quality of the person doing this podcast so that you can rest assured you are in fantastic hands. Back in the day, I guess I should start with, I grew up in industry in the mailroom. I started in the mailroom and worked my way through DuPont at the time, through the mailroom, through clerical functions, and then into accounting roles, and ultimately up to when I left, a controller role at the next company. So back when I was still doing clerical work, which we'll just say is sometime in either the 80s or the 90s, and I'll let you determine which that is, there were a whole bunch of us in this big old bullpen doing freight payment, and we all had these adding machines. And basically what I did all day, they were doing some different stuff, but what I did all day was add up numbers and check proof numbers on these yellow ledger sheets. So it occurred to me that we really could have an Office Special Olympics or Office Olympics, not Special Olympics, an Office Olympics competition, because I was pretty sure I'd be the fastest adding machine user in the entire room. I was youngest, I was quickest, I was just sure I was going to win. You will be glad to know we did have the competition, and it included a lot of fun, old clerical stuff from the day, but I won the adding machine test or competition. So there you go. You are in fantastic hands. If I can't find your cash, nobody can. Now, that's a little bit of a throwback, but my point is that with a Mac now today, I am just astounded at how much more I can do more quickly. And if you just take one task, right? Creating a row of numbers, doing an adding machine tape, you had to do the adding machine tape twice to see if you got the same number when you added it up both times. And if you didn't, you had to go back and do an adding machine tape a third time in order to make sure that you had correctly basically added up the column of numbers. The column of numbers could be anywhere from 2 to 200. And today, I just key some numbers into a spreadsheet and boom, I have my answer. And that's the least of what a computer can do in this day and age, the least of what my MacBook is capable of. I'm recording this podcast on it today. It's going to get out to the world because of the tools that I now have available on this one machine. So why do I bring this up when I talk about context for entrepreneurs and financial cash flow? So if you think about it, the Mac is an end product that I get. I know absolutely nothing about how it was designed, what the first drawing looked like, how they had to test it, what they did to make sure it works, how they made sure the programs could load on it, how they even physically built the thing. And don't even get me started on how a microchip might actually do all of the things that a microchip does. I have no clue. And if somebody had presented me all of those components, even if they'd given me all the right things at the right time, even if they'd put them in order for me, I still would have stared at that table and gone, there's nothing I can do with this. And I would have gone back to my manual way of doing my job. So a lot of times what happens to entrepreneurs, and thanks for sticking with me through this, because what we get from our financial support group, and it's not their fault, bookkeeper or accountant, there are reasons that they do things the way they do them. But what we often get from them is all those components lying on the table. And we're told, now you make sense of this. So we'll get a P&L out of context. We'll get a balance sheet out of context. We'll get a cash flow statement. We'll get maybe even an accounts receivable aging report or any number of other things. And they're dropped on our table and we're told, hey, the month is closed and here's your stuff. Well, right off the bat, an entrepreneur might not even know, nor do they have any reason to know what quote unquote, the month is closed actually means. So it's very similar to getting all the components for a Mac and having no idea what to do with them. So we fall back on the things that we know work. We know that we can add numbers up with our hands. We know that we can save paper receipts. We know that we can, manually try and figure out how much cash came into the bank and how much expense went out. But we also know that we never get to the answers we really need to know in order to run our business. And that's kind of what I want to expand on a little bit today and give you some very clear tips on how you can get out of that trap. So right off the bat, as an entrepreneur, your day is spent making decisions. You start when you wake up in the morning, you end when you go to bed at night. And quite frankly, it's not really any different for executives or managers in industry either. It's not any different for anybody. It's a series of decisions that we make minute after minute. And the object, at least the successful, tend to be able to make those decisions more quickly. Oftentimes they have a better success rate with their decisions than some others. And the reason is because they know how to get exactly the right amount of information to make the decision. They're not paralyzed trying to get every ounce of possible information they could get, but they're also not kind of rushing to judgment with nothing that they can figure out how to use. So right now, I would suggest that some of the most important decisions that we're making as entrepreneurs actually do involve our financials, because we need to know what we can spend money on, what we should price our product at. We need to know how much can we spend on personnel, how much can we expect to have in our bank at the end of next week or next month or next year. And we need to know that in order to be able to serve the purposes of the business, but also to serve ourselves. And in order to do that, we need the best tool for looking at our financials, because that's the information that really drives some of these key decisions. So I want to give you a couple tips today on what you can tell your accountant and your bookkeeper to help them provide you this information without you having to understand how the Mac was built. For example, we want them to put in your hands something that you can look at and go, aha, I understand from looking at that piece of paper or that report online or that summary exactly what I can do in my business to change those numbers if I want to. I know what created them and I know what can change them. So it's knowing what your business levers are when you look at a number. And a number by itself, in addition to that, is not going to mean anything to you in isolation. It has to be put in context. So the two things that you can ask your bookkeeper to do to put them in context are to put them in context as to time and put them in context as to expectations. Okay, and I want to talk about those two things, how easy it is to ask for, and then even more importantly, how quickly you can ramp up your ability to get the most out of that information so that you can make those decisions you need to make day in and day out, and start to remove that sort of gray cloud of, I'm relying on my gut here because I don't have any better information. Even though all that paper's sitting on your desk and you're saying, well, I should be able to put this together. I would argue, no, you shouldn't be able to put that together any more than I could put it together a Mac if it was thrown on my desk in pieces. So let's talk about time. What can you do? There's one very simple thing you can ask your bookkeeper to do when they provide you your monthly reporting. And that is, instead of just having them tell you what your numbers are for the month, so you probably get a profit and loss statement, you probably get a balance sheet. That's all well and good. All you need to tell them is, on one piece of paper, when you give me that profit and loss statement, give me a column for each month in the year so that you can see on one piece of paper how your revenue grew from month to month to month to month, and how your expenses grew from month to month to month to month. And I'm saying growing because I'm optimistic. But the point in getting the monthly report is that you can see if those trends are not going in the right direction. So now if you get a report that says, here's everything that's happened for the last 10 months, and I know for each thing, I know for revenue, there's only 2 things that can make revenue change. How many I send and how many I sell and how much I sell it for. So that's pretty easy. You know what your business levers are. And you can see and look at that and go, oh, in May, I dropped my price. Look, volume went up, but overall, my total revenue went down. And then when I was in June, I went ahead and increased my price and things stabilized again. If you have a monthly view that you can see on one piece of paper, that makes your life so much easier because you have your information in context. The second thing you can tell them to do is provide you information in context of expectations. So I talk a lot about cash flow forecasting and that it's not as tough of a thing as it sounds like it is on the surface, and dig into prior episodes of this podcast to find that out. It's really not that hard. And what I would do is give my bookkeeper each month what I expected to have happen based on my pricing, the quantity, whether I was going to hire people or not, whether I was going to increase my spend on IT or travel. And I would say, here's what I expect to happen this month. And I would tell him or her, when they provide me the month-end report for the profit and loss statement, I want them to give it to me showing me a comparison between what I expected and what actually happened. And there's your second dimension of context. So we've put it in the context of time. I can see what my actual numbers are doing month over month over month, so that can trigger a real understanding for me of what's happening in the business. And then the second context I have is what happened versus my expectations. So for example, if I had said to the bookkeeper, I'm going to decrease my price and I expect to sell twice as many things, so therefore my revenue should go up this month. And when he provides me the report, he says, you expected, 20,000 in revenue this month. You actually got 24,000 in revenue this month. Then you can dig in and look at how many you expected to sell at what price, how many you actually sold at what price, and then you have some real information to make decisions. So that's really all this is about. Numbers for me, for you, for anybody just don't make any sense when they sort of stand alone and get dropped on your desk, like the pieces of a Mac might get dropped on your desk and somebody says, hey, build your machine. With the financials, somebody says, hey, build your financial story. No, get your financial story built, or the components of your story built, before it gets handed to you. And then you can use that information quickly, regularly, and with a whole lot more confidence than just falling back on your gut, or in my case, the old adding machine, because now you can see on paper how the story of your business plays itself out across each of the months and as compared to your expectations. Hope this has been really helpful to you. I so enjoy doing the podcast. Please download, subscribe. If this has been useful to you and you know somebody else who might get a benefit from it, feel free to share it with your friends. And if you feel like giving it a rating, please hop in there and do that. I want to get the word out to as many people as we can because there's so much more folks can get out of their financials than they are today. You take care, and I will see you on the next episode of the Cashflow podcast. This is Pam signing out.